like oil and gold.
You know what? I had stuff in the opening. I won't pay over that.
$8 through the upside on 8. Sell.
And just as Adam Smith suggested, traders here compete fiercely to make as much money as possible for their clients and themselves.
You want to win, and it's the competitive nature of all of us that drives us to push harder and harder each day. You know, as the room gets busier and busier and the noise starts to elevate, if I'm sitting here and I'm not that active, and I see somebody next to me who's busier than I am, it gets me going.
That's total number he would.
Hey, Tommy, the 38,000 guy added 50, so...
Why does it matter what happens in places like this? Most of us use financial products like mortgages or mutual funds. The firms that sell us these products take our money and invest it to make more money in the financial markets. If traders make profits for these financial firms, they can then offer us cheaper mortgages and better mutual fund returns. The result, a matrix of money that connects us all. It's built on an economic model that says most of the time, most of us, and most of the traders behave rationally. But what if this model of human behavior isn't right?
Stocks shot higher, giving the Dow its best day
in 2005, rational economics, it seems, has delivered. Times are good and have been for years.
Real estate market in many parts of the country right now.
Many think the long boom will continue.
Earnings jumped almost 8-fold.
Our economic horizon is as bright as it's been in a long time.
For those in the housing business, these are gold rush days.
Economist Robert Shiller is unconvinced.
It did seem to me that there was complacency and overriding feeling of normalcy, that this can't be wrong.
He thinks the boom is a mirage.
While the real estate market has grown to new heights and new prices.
He's worried about one thing in particular: housing. Housing prices have gone up 6% a year for decades. In 2005, in some places, they're rising at 25%.
This was very anomalous performance. The idea that home prices always go up led people to think that they had all found the investment to end all investments.
Thousands came to a two-day expo hoping to learn how they could turn investments in real estate into personal riches.
Shiller believes America is in the grip of an irrational mania.
July was still the strongest housing sales month in history.
I predicted that it was likely to correct down and that it might cause a huge financial crisis and a worldwide recession.
In a book tour that summer, he warns of the dangers.
Economist Robert Shiller is out with a new book titled Irrational Exuberance.
It's kind of a frame of mind that we get into when prices keep going up and we see a lot of excitement. That's irrational exuberance.
Rational economists dismiss his warnings.
What does irrational exuberance mean? It's a lovely buzzword for a view that prices are higher than Bob Shiller thinks they ought to be.
Bob, who's a friend of mine, has been consistently pessimistic about prices.
The debate about whether rising house prices are the result of a mania or rational calculation intensifies.
Or the individual household was not being irrational. They were getting low down payments, low interest rates, so it was a rational decision to make, particularly when they expected prices to continue to rise over time.
Financial institutions share the conviction that house prices will continue to rise. They offer mortgage deals never seen before. And the country's top financial officials are optimistic.
The U.S. economy has weathered such episodes before without experiencing significant declines in the national average level of home prices.
House prices have risen by nearly 25% over the past 2 years. At a national level, these price increases largely reflect strong economic fundamentals.
This confidence isn't just a shared hunch. It's based on the widely accepted models of rational economics.
Basically, you'd build the models assuming people were like these calculators who would look at the range of possible outcomes and the risks and balance it all out.
In 2005, the economic models assume consumers will make careful calculations about their mortgages.
Economists assume we shouldn't worry about people taking out 95% mortgages or 100% mortgages or trust me mortgages, because they'll only take out those mortgages if they have made all of the relevant calculations.
Instead, as housing prices soar, many consumers take out mortgages they cannot afford and assume debt based on the rising value of their homes. So why might so many people be willing to take on so much risk? At Stanford University, researchers stumble on a possible answer. Their research at first has nothing to do with money. It isn't even being conducted by economists. Psychologists are using powerful brain scanners to explore the mysteries of the human mind, especially emotion.
I started looking in the brain because I was interested in emotion, and I was convinced there must be something in there that could give us a handle on emotion.
Psychologist Brian Knudsen wants to know how emotions affect one of the oldest parts of our brain that evolved so long ago we share it with many creatures, even lizards.
In general, the lower the area of the brain, the farther back it goes in evolution, right? So we humans still have these subcortical areas deep in the brain that are ancient.
This part of the brain is called the nucleus accumbens, and it gets triggered by the most primal human needs.
From the standpoint of survival, it makes a lot of sense that natural rewards like food and sex and so forth would activate this circuit that makes you go out and get those rewards.
This part of the brain plays a crucial role in drug addiction. Out of curiosity, Knudsen tries to find things that excite it as much as the prospect of sex and drugs. So he asks people to imagine they are about to receive some money.
Once we started using money, we found very reliable activation in these emotional circuits. This suggests that it's not just sex, it's not just drugs, it's not just food that activates these circuits. Money also activates these circuits, and it does so very powerfully.
Could the fact that an ancient part of our brain gets excited by money explain some of the frenzied behavior by financial traders and consumers during the housing boom? Rising house prices are an example of a phenomenon called a speculative bubble, when prices of a financial asset suddenly take off and keep rising. Robert Shiller believes it's emotional excitement that drives them.
What's going on is that as the bubble grows, more and more people are coming in, and they're coming in out of envy for the other people who are shamelessly boasting, I made more money than you did all last year working. And for a while you think, it can't be right. But then you think, maybe I was wrong. Maybe I should get into this. And it's really driven by human emotion.
This link with emotion